Rainer, I'll leave it up to you to take it from there. But thank you.
Well, thank you very much, Justin, and apologies to all. You can test your technology as many times as you want, but on the day, there will still be a glitch. So just some housekeeping before we start. I'm sure they may have mentioned it. Please mute your microphones, and right at the end, we'll have a Q&A session for everybody, and then I'll explain to you how our Q&A session will work. So today is the first in a series of planned webinars that we intend to host weekly with the aim to provide some guidance to businesses about surviving post the COVID-19 world. Every week we'll try and get some relevant topics, and we'll get some relevant topic experts to provide advice on this program. I also need to say that these programs are graciously sponsored by Safintra South Africa, who are the leading roofing and building system suppliers in South Africa. So also they've asked me to say that all views expressed on this program are not necessarily those of Safintra. So let me start by introducing the team today, and I'll start off with Barry Goebel. Barry is a director at Gibb Insurance Brokers and a registered independent expert in insurance for the South African High Courts. Good afternoon, Barry. Do we have Barry on the line?
Yes, good afternoon. Sorry.
Welcome, Barry. And next we have Jaco du Plooy. Jaco is an executive and a non-executive director on various boards in South Africa. He also specializes in cash flow management and cash flow generation, which is quite pertinent in today's discussion. And he's also a seasoned financial manager who I've worked with. Good afternoon, Jaco.
Hi, Rainer and team, and everybody else sitting in.
And lastly, we come to Craig Johnson, who's the founding director of BCM, which is Building Credit Management. Craig has been in the credit management for 34 years, and he's an expert on risk assessment and the management within the building industry. So,
good afternoon, everybody. Thanks, Rainer, and welcome everybody out there. Hope it's a meaningful afternoon.
Yeah, thanks, Craig. So, with this COVID-19 virus, many companies are facing huge challenges for survival as a result of the implementation of the lockdown and the pandemic that's sweeping our country. And something I'd like to just start off with is it's very clear that when we return back to work after the lockdown, the virus will still be there. We will still have COVID-19. So in other words, we're going to have to develop new rules on how to work with our staff, with our customers, with our suppliers. There will also be new ways to approach our cash flows, our demand cycle, and our supply cycle. And it's going to demand a new type of manager in this new environment. And that's hopefully what we're going to talk about today. I think what most people fear is the uncertainty. So hopefully with these seminars, we can try and reduce that level of uncertainty within our listeners. So let's start off with Jaco. Jaco, maybe you can start off by telling us, in your opinion, what will be the financial situation after the lockdown of COVID-19?
Well, Rainer, in a financial sense, I don't think life will be normal as everybody expected, and it will be like that for quite a while. I think what is important is everybody's going to be in the same boat, and as a result, everybody's going to hold on to cash as much as possible and as long as possible. So there's a big chance that some of your customers won't pay you in the short and in the longer terms. From an economic strategy and in terms of the phase reopening that our president is going to announce tonight and the plans there, I think there is going to be a very big possibility that there won't be 100% synchronization in your normal business where your suppliers and your customers will open at the same time, and you need to adjust for that, to actually survive in this period coming on. You also need to look at, because of this slow recovery, you will need to look at some of your expenses. You need to really cut it to the bone and, to ensure almost sustainability and survival. I think I've read that the banks have actually made some good gestures and that they've come to the party in some sense, but I think they haven't moved away from their historical view of thinking and, getting loans from banks, and especially in these difficult times where everybody's not sure about repayments. I don't think banks are just going to extend credit easily. Then also when you look at your own business, there's definitely going to be a loss of productivity where you might lose some key personnel, due to the sickness or even them attending to some of their sick family members. That gap will need to be filled, and it will require longer working hours from current management, which won't always be remunerated accordingly. And then overall, besides everything else happening, has been downgraded by Moody's. And, as a result, we've already seen what the exchange rate has been doing. It's, it's up and down between 18 and 19 against the US dollar. And, that's going to be the new norm. It's going to affect our businesses and especially guys importing. They need to be aware of this and how they need to fulfill contracts.
Thanks, Jaco. Just perhaps, Craig, as a second view, what is your view about COVID-19 after the lockdown?
Yeah, thanks, Rene. I actually concur with Jaco here, but I think let's start with during COVID. Okay, the outlook has mainly been one of pessimism, due to uncertainty. So difficult to plan when there's this navigating in uncharted waters. And unfortunately, we know that most companies, when I say unfortunately, I understand, but it's a stance that's been taken. Most companies have taken a conservation of cash route, which is both positive and negative. The positive side is that they're looking to save jobs, okay, obviously, retain good staff. The negative side is this lack of cash flow flowing through the supply chain. And I just think this will adversely affect any recovery at the rate that's going to be required.
Okay.
After COVID, however, that was during COVID. After COVID, the same uncertainty is going to prevail. And we're not clear of the rollout of the phase of reopening of the economy, as Jaco was mentioning. Not going to be full blown. Okay. And I'm saying certain industries may gain advantages, and we assume it'll be clarified at the President's announcement tonight. There's numerous stimulus packages that the President has announced, but it's the qualification and implementation of these that is the issue. Qualification being, turnover values, et cetera, and there are numerous of them around, and the red tape of filling them in is enormous. But I'd like to think that government will include private enterprise to assist with the planning and issuing of tender documents for the infrastructure projects. I also believe that the lack of capacity, skill, and the will have affected this in the past, and incompetency could well be inferred here, guys. Post-COVID will be totally dependent on demand, which, if substantial, could be hampered by the ability to supply or inability to supply. We also have this reliance on imported materials, which is problematic, and they're certainly going to have an influence. So what I'm saying, and this is the easy part here, is that businesses are required to be recapitalized. Where from is the issue, okay? And one hopes that the banks will come to the party, as Jaco has said. There is a softening. Let's just hope it remains. But the problem is, and the way I see it, or the challenge rather, is a deteriorating balance sheet. All of these businesses with balance sheets have deteriorated over the last couple of months, and certainly now is going to negatively affect this. A bit long-winded, but that's the way I see it, guys.
Yeah, thanks. So what I hear you two guys saying is that the supply chain is going to be different. The demand might reduce. Supply may not be that easy to come by. That'll be one aspect you have to manage. Another one I hear you saying is that cash flow will become a key factor for all managers to manage in the future post-COVID. And most certainly it's clear that it's not going to be business as usual. So then let's move on to Barry and ask him, Barry, typically what are the risks facing all businesses from an insurance perspective when we return back after the lockdown?
Thanks, Renu. So there are multitude of risks that COVID-19, and more specifically the responses that the lockdown causes. As for the insurance industry, we've seen a scrambling of insurers and reinsurers trying to assess the possible exposures to the pandemic. Given the breadth of this could be quite significant. So far, insurance classes most likely to be impacted in the short-term insurance industry was initially the travel insurance, but now credit insurance markets and management liability, we'll know that as directors and officers liability, is heavily exposed. The risks that businesses could consider as it relates to their insurance programs, they should pay close attention to some of the following. Unoccupancy clauses. Your assets policy and property policy will likely contain an unoccupancy clause, which could cause cover to be curtailed if the premises is unoccupied for a certain period of time, typically 30 days. This curtailment could be an increased deductible, or insurers could actually carve back certain covers, such as malicious damage and theft, or in cases, void cover altogether. Now, we've made a number of inquiries to all the insurers to find out what their position on the application of this clause may be, but unfortunately, the responses are being quite inconsistent. So we would recommend that businesses make this inquiry to their insurers. Another is increased lead times. Your business interruption cover would most likely have an indemnity period, being the period that they would cover you for the costs and the impact of revenue following a loss. However, consideration should be given to the lead times and items that are procured internationally, given the impact on supply chains and difficulties at ports of entry. These difficulties may materially impact the length and it takes to reinstate your asset, so I'd recommend that this be reviewed and changed if necessary. Final consideration, many insurance policies have conditions or warranties on cover relating to things like sprinkler systems being operational, burglar alarms, etc. With many premises being unoccupied or not regularly viewed as being effective, there's risks that these warranties could be enforced if not functional at the time of the loss. So we'd recommend that businesses review, because some of these warranties may apply.
Yeah. So also what I'm hearing from you is, insurance companies are, it's normally a payment we pay, not really wanting to pay it. But I think post-COVID, what I hear you saying is that it's imperative that we speak to our insurance companies, our insurance broker, and make sure we understand all of the clauses in our insurance document so that we don't get caught short later on when a disaster really happens or we need to claim or something going forward. So maybe we can look at it from a business point of view. Craig, what do you think the risks will be facing us post this lockdown? What are the risks that we need to manage post this lockdown from a business point of view?
Yeah, Renier, yeah, absolutely. One of the biggest risks, the way I see it, is going to be impact on companies on their ability to retain staff and therefore their capacity, when things open up again and what's going to be going on there. And then obviously management of staff is going to be a problem, because management support is going to be there with extreme pressure on HR departments on dealing with these issues. You mentioned, I think it was Yaku mentioned something about staff dealing with people that are sick themselves, etc. That's going to be it's going to be an issue. Another key risk, the way I see it, is access to cash and credit facilities. Okay, this is supported by the present view of a number of suppliers who are withholding cash, as I mentioned before. And that could have an adverse effect on relationships on the way forward. It's a quid pro quo as far as I'm concerned. You're a debtor and you're a creditor. You've got to treat the things the same. Another thing here is the credit insurers are playing a huge role in mitigating risk. And it's vital that the insured suppliers comply with their policies. Insurers have given dispensations of late regarding terms in support of COVID-19. I'd strongly suggest that each of you have a look at those terms, chat to your broker, find out that you are compliant. Another risk is a view of the financial institutions, which hopefully they'll take a softer stance. So again, it's this uncertainty, Rainer, and that's what we've got to bat through.
Yeah, I think a big change is going to come in our banking world because, in the past, what served the banks very good was to tick the boxes, and if they tick the boxes, you got your credit. I think in this new post-COVID environment where everybody's trying to make up the cash they've lost during the lockdown, supply chains having diminished or difficult to manage, I think they're going to have to take a different stance than the archaic tick box approach they had in the past. That's very interesting. What concerns me, what you mentioned, and those are the two big concerns I have for post-lockdown, is the access to cash and the access to credit facilities. And it's going to be very difficult to get credit insurance for your customers, I think, post-COVID-19. Yeah. And then, of course, there will be the impact on your staff, as you mentioned as well. It's going to be a physical and a mental impact on your staff, not just their own sickness, but also for them sometimes tending to sick family members within there. But there's also an emotional concern. Everyone's uncertain, and our managers will have to refresh a bit on change management, I suppose, and know that they're going to have to manage their staff in a slightly different manner than they did before. So, Craig, perhaps I can stay with you. What do you see as the risks for company obtaining this credit cover, either for themselves or for their customers post-COVID-19?
Yeah, Rainer, that's another one. We actually, we've got a webinar with CGIC tomorrow afternoon, so it's going to be interesting. All of the brokers have been invited. So it's going to be interesting what that is. So I can't obviously give what's still to happen. But they are between a rock and a hard place at the moment, Rainier. Reinsurers are reducing exposure across the board, okay? This is having a direct impact on policyholders. I'm sure a whole lot of policyholders today, if anybody out there, would have seen a whole lot of the reduction exercise where one of the insurers is reducing by a flat 30%. So unless you participate and kick back against it, I'm not saying you're going to be successful with kicking back, but unless you obtain some sort of clarity from them on that it's not across the board, that it's a reduction of total exposure, I think that's one thing you better check out. And I'm hoping to find that out tomorrow, obviously. But what we found of late is that limit applications have to be supported by financials, and a lot more conditional limits are actually issued. And this is creating huge problems because some of the conditions are quite onerous, and I can understand where the insurers are coming from, actually, but it doesn't help the trading market. So it's a tough time for everybody, and getting cover these days, Rainer, is just a bonus.
Yeah, and actually what I've been saying for quite a while now is that I think post-COVID has just brought this closer, is that we are going to have to get very, very close to our customers. You have to know what is going on in his business before you extend credit to him. And likewise, you are going to have to give your information to your supplier so that they can extend credit to yourself. I know in the past, many companies said, you don't get my company financials. Well, I think if that's the case post-COVID, you will find that you will get very little credit, in fact, zero probably. And it's going to be tough. And I think many managers are going to be faced with the solution is, do they extend credit past the credit limits of the credit insurance companies? And that is a decision which I don't think managers should take alone. They should definitely do it in consultation with a senior member of their staff. So, Jaco, maybe I can come to you and say, what are the cash flow management actions we could take in this new environment, seeing as you're an expert on this cash flow management going forward?
I don't know if I'm an expert, but yeah, some experience, luckily. No, I must say, as we all know, cash is king. We know what cash can do. It helps you negotiate better deals with buying stock. Is always, there's always that opportunity of getting or negotiating discounts with suppliers, which I think, that adds to the margins and it adds to your sustainability and your profitability on your own company. Some elements we can look at is in terms of sales, we can look at your operations can't go on as normal. You need to really do margin management and look at every project and see if you're actually going to be profitable on it, where you actually sell for more than you need to pay for the expenses. We've mentioned previously expenses that you need to monitor. You need to see what you can cut to the bone. The nice to haves you need to cut out now in this period that's coming, a second and a third DSTV and all those, nice things in the past. Those really need to be cut now more than ever. And, take the time and go through your income statement and go through your expenses and see where you can actually cut. In terms of suppliers, I always say suppliers are the cheapest form of credit because most of those suppliers in their contracts don't have an interest or a default interest clause. So that's always one you can try and extend as far as possible. It's not generating cash, but it's actually, keeping or conserving your cash that you've got. The most important thing there, though, is you need to always have an open discussion and, communication channel with your suppliers in that case, and that you don't just take it for granted and, actually just talk to your suppliers as well. In terms of customers, you need to go and see what you can do. Like you just mentioned, to extend credit, you need to go and review existing credit policies that you've got and agreements that you've got in place with customers. And really, like you said, you need to know what's going on in your customers' accounts and in their business. And all new credit limits needs to be almost signed off right at the top by the MD or the CEO of the company. On a general point of view, don't over borrow. We've seen where people have gone and geared themselves, to such an extent where they eventually go bankrupt. So always be careful of that. In these times, also be careful of contracts that you sign. Where you sign addendums where there's rental payment holidays and things like that. These addendums usually catch up with you later in life because usually these are just to protect the landlord and not to protect the tenant. And go review those rental agreements. A lot of them has got occupancy clauses that if you're not able to occupy it, you get a rent holiday. So just go and see what you can negotiate there. And then in general, just watch for surety ships that guys sign now in agreements. Eventually that will come back to you personally, and especially in smaller entities. And, the people will enforce those directly onto the directors, and that will result in personal losses. So, all of these are just to help manage your cash flow in general.
Yeah, I agree with that. Don't do jobs just for the sake of keeping your factory full. Make sure they're at a profitable margin, or otherwise don't do them. You can do short time with your staff rather. Don't just take on jobs to keep the factory rolling. Those times are long gone now. Everything must be for a profit. And of course, the cheapest form of credit is your creditors. So use it if you can. Craig, I saw you wanted to say something. Do you want to add something on today?
Yes, this is a tough one. It sort of goes against what I said earlier of retention of staff. Well, it doesn't actually. It actually supports it. Is negotiating with staff for short time or reduced salaries, rather to retain the skills to maintain the business's capacity than to retrenched. Guys, as we all know, retrenchment is extremely expensive and time-consuming, more important. You're not going to have time to give to it. CCMA is not where you want to be. So, and another thing, I from a debtors perspective, I'm obviously focused on debtors, but take a hard look at your ledger and customer base and make some difficult decisions on who you are continuing to supply and who needs to be suspended. Take some hard calls. Unfortunately, we're all going to be chasing a sale. We know that. We need capacity numbers again. But on those bad accounts, get into negotiations fast. And then the good accounts, support them and see if you can supply more to them. That's the way I see it. That's about me on that one, Rainer.
And 100% I agree with you on that factor. I was talking to someone earlier today where they said, but then we're going to lose the job. Make sure you supply to customers who will pay you. If the customer's not paying you, let him go to the opposition and not pay them. But make sure that the customers you supply, you know them intimately and they will pay you. Okay, so Jaco, perhaps I just want to ask you, if I'm now having to manage my cash flow, manage this new supply chain and intimacy with my customer and my supplier, what other ways can I generate funds post the lockdown period?
Rainer, the thing is, we've already discussed what you can do with your, it's not just raising funds, it's also conserving some of your funds that you already have in place or that you already have in the bank. We've already mentioned, extending payment terms with suppliers and negotiating those extensions with them. From a customer point of view, all new customers, you need to push for COD payments or at least deposits as far as possible. And you really need to secure cash as far as possible. A lot of the contractors or clients of these clients will most likely have the final customer paying them some sort of deposit, and see if you can secure a portion of that in your own business. These are some of the ideas. And then, of course, there's the various financial assistance that the government is producing. I saw that the UIF TERS is one of those options that are available for your employees. That it's limited to 17,000, but all of these small little amounts add up. There are also deferring of payments that are offered by SARS. I see there was the 35% for the pay, or 35% of your pay as you earn that you can extend. Just be very careful that there were sub-clauses in those things that actually mentioned that you need to prove that you actually struggled or that COVID-19 actually did affect your business. Otherwise, you will incur penalties on these things. So just make sure that you don't just take or make use of everything. Make use of actually things that will help you in the future as well. If I can also just add to what we said earlier about retaining staff as far as possible, and especially key staff members, and not retrenching them. Everybody needs to still work. Everybody eats and have a bond and everything, and school fees and everything to pay. And we need to realize that a lot of the employees or guys that you might let go in the short run to make some savings, they'll eventually if they, clever oaks, they're going to open up their own businesses, and they're going to, operate at a lot lower margins. They don't have rent to pay. They don't have employees in the secretary and accounting systems and everything else. So just take into, mind, or bear in mind that in the long run, those people can actually negatively affect your business should you let them go in the short period. And rather look at short-time reduced salaries and things like Craig mentioned. There's also, just going back to your question in raising funds, you can also go speak to your bank. It's for them, it's part of their business to have you in business. So see where you can raise funds, but have it project orientated. Raise funds for a specific project, and see that you actually have a plan to repay that, and not just have open credit. And then go and see a lot of businesses, existing businesses that have been in existence for some period, have assets that they've fully paid. Asset is always a good way to raise secured funding for banks, and refinance some of those assets. Have the discussion with the banks, and be open and clear with them, and build if you have a relationship, build on that relationship.
So it's actually some very good points there. What I heard you say is, in this reduced credit limit environment, is perhaps increase your COD, cash on delivery, or increase the deposits that you ask from your customers. Perhaps reduce their payment terms, which will bring the cash in earlier. And another interesting one you mentioned was, I know most companies who have paid off or own the property they work from have paid off half the building. Asset-based funding from the bank. Go request some extra cash from the bank if you need it. Of course, they'll do their tick box exercise to make sure that you can pay the money back, but at least that's a way to defer payments to a time when things return semi-normal. Not the same, but semi-normal. So besides managing our cash flow and becoming creative in these ways of raising funds, Barry, I'd like to ask you is, when does it become time to claim force majeure from an insurance perspective?
Yeah, absolutely. Thanks. We've had a look at this in terms of the short-term insurance industry, and short-term insurance not including life and medical aid. And the short-term industry, the classes can basically be divided into two areas. The first being property damage, such as your assets policy, motor, construction, plant, marine. These would respond to physical loss or damage from insured assets. Force majeure, as it relates to the pandemic, wouldn't fall into the typical definition of what's covered in terms of damage, so the policies wouldn't respond. Other policies, such as injury types policies, your group personal accident, travel, are also classified in this area, so force majeure wouldn't really be a covered trigger here. Where it does get interesting is under liability or casualty, as it's also known. This would include your general public liability, trustees liability, professional indemnity, directors and officers, etc. And these are called on to respond to a delictual liability event. Now, delictual liability comes about in the event of negligence. So here it gets a bit murky because, as it relates to force majeure, because force majeure in itself doesn't constitute a cover trigger. As it's strictly speaking, it relates more to contractual liability. But the nature of force majeure does involve liability or its avoidance. So should negligence be involved, it's conceivable that these products or these policies would be called on to respond. What's important to note here, however, is that intentional or deliberate act or omission by the insured would be excluded under these.
Yeah. I love these insurance companies, and that's part of my role today. They talk about delictual liabilities and devoidance. I don't have a dictionary to hand to go and look for it, but in essence, what I hear you saying, Barry, is that really force majeure post-COVID-19 will not really play a big role as a result of COVID-19. And in fact, we got 3 or 4 questions from some of our listeners asking us about force majeure, particularly as it applies to the JBCC contracts. So I spoke to 2 legal experts, and note that I'm not a legal expert and no one in the panel is a legal expert, but generally the opinion is that we will not be able to claim a compensation as a result of clause 29.1.4 in the JBCC contract, which talks about force majeure and all sorts of other things. That this pandemic or the state of disaster, because it's not a state of, I've lost the word now, but it's been declared only a state of disaster. So there's no force majeure in that case. What you can claim is from another clause, I think it's 29.3, I'm not quite sure, is an extension of time. And perhaps you can negotiate more than, so if you had 4 weeks left to the contract, you could probably negotiate a 5 or 6 week extension to time because you have the restart up time again. So on the JBCC contracts, as a result of COVID-19, there are no clauses which the legal experts I spoke to could find any force majeure actions applicable. So in summary, guys, thank you very much for your inputs. I'm going to ask you to each summarize, and I'm going to ask perhaps Jaco to start and then Barry to go. Jaco and then Barry and then Craig to go. I've got this question. I'm starting my business tonight. The president says I can go back to work on Monday. How am I going to manage my cash flow for those first 3 months post the lockdown, and particularly the first month? And it's perhaps just a summary of what we said today. And we'll start with Jaco, then go to Craig, then go to Barry, and then go to Craig. Jaco.
Rainer, I think like I mentioned earlier, there won't be 100% synchronization between customers and suppliers opening. So once again, have a look at your business operations and function at the cylinders you need to. So we put your staff on short time when necessary. There is cost saving initiatives there. Extend payment terms with your suppliers, discuss it with them, and open those discussions so that you save some of your cash as long as possible, and then manage your customers. Have discussions with them and offer them discounts to collect funds as quickly as possible, and because you can always negotiate afterwards with your suppliers for additional discount, and basically putting yourself in the next position if you transfer that funds on. Expenses, definitely cut to the bone as far as possible. Cut the nice to haves for the short term at least, and focus all your cash resources on your projects. In your projects, turn your inventory, your old stock into cash as soon as possible. I know it's very difficult, but now we have time to look at these things. And in terms of turnover and operations, like we've mentioned and yourself mentioned a couple of times, you need to do margin management. Don't just do a job for the sake of doing a job and keeping busy. It's really going to be tough out there. So, margin management and do the projects at reasonable profits, or at least some profits.
Thanks, Jaco. Barry, from your side?
Yeah, so I can't really speak to cash flow management, but extending on that and looking forward from an insurance perspective, I think it's certainly going to be a new normal, and we're definitely going to. I don't think because of the uncertainty, we don't really have a grasp on how all of these legal issues that are happening now are going to play out and then impact on credit and insurance coverages going forward. It should be really interesting. We're already seeing a number of insurers. I just saw a new one today, carving back cover and putting in specific exclusions that relate to pandemics and all of that, just because the scope of this is so large that it really needs to be considered in terms of insurance solvency and all of the rest. So I think it should be interesting times ahead.
Yeah, interesting times is, I think, an understatement. Craig, from your side?
Yeah, the guys have covered most of it, but I think the most important thing, Jaco certainly mentioned it, is that it's a different playing field at the moment. That funding from banks is not going to be really forthcoming. Yes, they have your records, etc. But it's whether they're prepared to grant those extensions. So I'm saying recapitalize your business one way or another. You guys, or there are lots of guys out there that have had a lot of fat in the years gone past, and there are assets out there that either need to be liquidated or bonded one way or another. That's one of them. Ensure that your overdraft is at the maximum that you can afford, because I'm talking about two. So one is a loan and the other one's an overdraft. The other one is, from a debtor's perspective, strict adherence to policy. Do not take chances. It's crucial, because that'll impact cash immediately. I'm saying relook at business plans. Have a look at where you've been, what you're up to. Things have changed. We've all said it today. Get another business plan together. You don't know if you lost if you don't have a map. So I say get yourself a map. With the suppliers, keep your relationships open and transparent. Problem shared is a problem halved. Not everybody wants to see everybody go under. In fact, nobody wants to see anybody under. They're all there to assist. Okay? Get involved. What I'm saying from that perspective, get your hands dirty. As managers, let's get down to the nitty-gritty. Find out what's really going on there. Don't rely on staff. Don't rely on other processes and hierarchy that you've had in the past. Get back down. And then from a contractual perspective, don't sign any pay when paid clauses on any JBCC or anything like that. Kick against it. That's about me.
Thank you very much. Actually, interesting. I've received 2 emails this morning from companies who want to lend me money to get out of the COVID-19 problems that I have. I didn't know I had COVID-19 problems, but anyhow, they told me I have. Interestingly, these interest charges that they want are huge. So beware of those as well. So what I hear you guys saying is, firstly, cost management will be number 1. Cut it down. Cut out the nice to haves to the bone. If you have to put your staff on short time rather than retrenchment costs money. And in fact, we're trying to preserve jobs going forward. So short time might be the issue, maybe a small pay cut, especially for the more senior people in your business. Adhere to your credit policy. Make sure you're intimately aware of your customer, what his business situation is before you extend credit to him. Ask for COD, bring in cash as early as you can, shorten terms. Above all, show empathy to your suppliers, but remain firm and fair. In other words, treat your debtors as you would like your suppliers to treat you. That's, I think, is a basic thing we would go out. Now, I'd like to tell all the participants, if you see on your screen, there's this little icon which you can click on, which brings up a meeting chat on the right-hand side there. If you have any questions for any of our panel members, please type in the message, and as they come up, I will select at random one or two of those which we can discuss. And I see on the meeting chat already, Innocent has said that JBCC has a clause for force majeure. Yes, it does. The thing is, payment for force majeure will most likely not be made as a result of COVID-19. What you can claim for, as I said, is the extension in time. So if any of you have a question which you'd like to ask myself or any of the panel members, please type it in your meeting chat on the right-hand side of the panel, and then we can move ahead. I know we have about 200 people listening to this webinar today. None of you have questions. You're also stunned.
No, I think it's because the chat has been blocked. It says only team members can chat. Ask the team owner to make you a member.
My dear Marjorie, can you please allow our participants to use the meeting chat to... let's see. Marjorie.
I'm here.
The members are saying, the participants are saying that they cannot type messages into the meeting chat. Only the panel's members are allowed to. Can you please allow them to... I see someone, Willie Notes, has come in and said, thanks for an interesting discussion. Yes, thanks, Willie. Okay, do you think we should... It is rather than... I'm trying to read a thing from Rory.
I agree with Rory.
Are able to type in. I cannot, unfortunately, allow any more allowances than what I've already done. I am not blocking anybody on my side on purpose.
So, okay. So perhaps, Craig, maybe you want to take that question from Rory, which is, do you think we should negotiate terms with outstanding debtors to rather get something in than potentially nothing at all? What would you say, Craig?
I couldn't agree with that more. You know, we discussed it at one stage. Even if it's called a good faith payment, show something, but come up. I say from a and let's call it a legal perspective or operational perspective. You should agree the balance with the guy. You know, it's a quid pro quo. Agree the balance. Agree extended terms, a couple of months. Try and tie it up, though. You know, you don't want to. It to be open-ended, but I certainly do agree with that. And also, you might get to know your customer a little bit better and find out what really the issues are, and maybe you can help. Maybe some of the things that we've spoken about today, you can share with him. That's the way I see it. I agree fully.
And then I see we have another interesting question from Innocent, who's quite active on our meeting chat. There's most likely going to be an escalation of price on contracts. As a result of backlog in commodities in production and so on and so forth. In that event, will suppliers be entitled to price adjustment on tendered bids before COVID-19? I'm not sure if anybody wants to take this, otherwise I'll take that one myself.
I'll have a quick go at it. I'm saying it depends on it depends on the order that you've signed. If you signed a fixed cost versus escalation, and then you're going to have to prove escalation. Raina, I'm sure you'll agree with that.
Yep, I agree. So it depends on the contract. If it's a fixed price contract, you're obliged to deliver a fixed price, but then you could probably claim, I'm just trying to think of the word now, a difficulty from your side. It was out of your control, not force majeure, but whatever that is called, one of those other terms that they say. And you could probably claim. I would imagine that most people will entertain an increase in price on this particular one over here.
Look at the contract. Yeah.
Yeah. Okay. I think that's sufficient. We have taken 50 minutes of our time contract, and then there's just a few things I'd like to say to finish off here. That is, this presentation will be available on the Safintro website through a link, or that is safintro.co.za. It will also be available on my own website, rsander.co.za. So if you go into our website, you'll find a link and you can review this entire presentation if there's something particularly you want to review, particularly with the tips about how to manage your cash, how to get extra cash afterwards. And then also, if there's any of you with particular questions you'd like to ask, I think you all have Marjorie's address. She invited you to this meeting. You're welcome to send your questions to Marjorie and she'll send the questions to one of the relevant panel members. Alternatively, you can mail myself either through my website. You can contact me or at rainer@rsander.co.za, and I will either direct your question to one of the panelists and or if I can, I'll answer it myself. But I'd like to say to you all, thank you very much for listening. Stay safe, and above all, buy local. Thanks. Cheers. Cheers, guys. Cheers, Craig.
Thanks.